as Joanne mentioned, my name is Jeremy Crick. I'm with Merchants Pact, and that's PACT. The PACT stands for Payment Acceptance Consulting Team. Again, we're an AOA member value vendor, and we advise businesses of all shapes and sizes on their payment acceptance and merchant service programs. So really, whether you're a practice that's currently accepting card-based payments, or if you're a practice in the process of setting up the ability to accept card-based payments from your patients, tonight I'll provide you a bit of insight on the fees that you pay when you accept cards, really what's controllable, what's negotiable, and how you can protect yourself from really, paying too much on these fees. And so with that, we'll start out with the first slide here. Looks like I went. Yeah. So, the problem. Really, I use the analogy often that the credit card processing industry or business, it's become a lot like the cable companies. There's always this great introductory rate, but without a doubt that, here down the road, whether it's 6 months or whether it's a year, you're going to open up your bill and, see what you owe, and it's going to increase, have increased dramatically from the previous month. And, typically when that happens, what we usually do is we'll call and threaten to cancel, and, they'll usually lower the fees a bit, but you never get back down to where you were originally with that promotional rate. And really, because of the complicated pricing structures and, due to the many providers and resellers that are involved, this is much more rampant in the credit card processing industry. Really imagine if you signed up with, say, DirecTV. They're, really popular in our area, but with DirecTV and never called in once about your bill over a 5-year period. I'd almost bet you'd be paying double, maybe even triple what you started at. And this is oftentimes, really what happens to physicians with their merchant services. There's also hundreds of different types of processing equipment that's available. Each processor is going to push a different solution or product that's really beneficial and profitable to their agenda. Again, because of the, confusing pricing structures that are often, there's often low, bait and switch sales tactics that are used. The monthly processing statements, Joanne had mentioned those, in the introductory. If you have one of those merchant statements, they're handy, or if you look at those very often, they're really confusing. They're nearly impossible to understand. And because of this, small businesses and practices really pay too much for card processing services. I mean, really so much, in fact, that they can pay anywhere from, 10 to 100 times more than what a national retail chain might pay for processing. And unfortunately, the way that processors make money, it's really off of each and every single transaction that you process. So let's say you're considering switching providers, the sales representative, they're going to want to review one of those processing statements that we've mentioned. And they want to do this to verify, what you're paying today, and really they base their quote on your current deal. So for example, if you're working with a sales representative, they may look at your statement and, he may say to himself, well, with my bottom line pricing, I can probably save Dr. Jones $5,000 a year, but I bet, she may sign up with me if I only save her $1,000. And, unfortunately, because, Dr. Jones may not know what's a good deal compared to a great deal, accepting $1,000 in savings sounds like a pretty good deal. And really that's not fair. So as we really go to the stakeholders here, you can see, a quick graphic of all of these entities that are involved. And this is just a quick snapshot. And so, to really help better understand, what all of the fees are associated with cards, we can talk about who all is involved here when each transaction is processed and, what fees are paid. So in any transaction that's processed, there's really no less than 5 entities that are involved in that single transaction. So obviously the cardholder and the merchant, but you also have the bank that issued the card. You have the card networks like Visa, MasterCard, Discover, American Express. You have the acquirer who's your card processing provider, which processes and settles your transactions. And they'll also facilitate the payment of the fees to each applicable entity. But what can really drive up the cost are really the different layers of middlemen that are involved within the acquirer. So as you can see, there are a number of different entities, that start up here with the acquirer slash processor, and each processing provider will have a sponsoring bank that actually funds the transactions that are processed. But really at the top of the food chain, you have what we refer to as really core processing providers. And these are processing providers who rely on no one else to provide their services. So really in all, there are about 10 of these organizations that exist. And again, we really consider them core processors or tier one processors. However, below these guys, you can have merchant service providers, maybe your EMR or EHR that you use may offer processing. Banks often sell credit card processing, for a form of revenue. You have what's referred to as independent sales organizations or ISOs, and these guys are just literally resellers of credit card processing. And so depending on who your processing provider is, you can really have as many as 5 different hands in the pot making money off of each and every single transaction you process. And obviously, the more involved there, the more money that you're going to pay on your processing fees. And so, with that, what I want to talk about are the different components of fees that are involved when cards are processed. And so, we've mentioned the statements, and this might help you better understand some of the terminology that you see on the statement, and will help you better, going forward in terms of, looking and monitoring your own monthly processing statements. And so really, regardless of the type of business, there are 3 different components that make up all of the fees that are charged for processing. The first of which is what's referred to as interchange fees. And interchange fees are the fees that are paid out to banks that actually issue the cards. So whether it's our big banks like Chase, Bank of America, US Bank, or even our small community banks, they all get paid each and every time that a specific card's used. And so these fees are determined on how the card is processed. So whether it's a face-to-face transaction, a transaction over the phone, maybe a patient payment via your website. So who the issuing bank is and the amount, it's determined on a per transaction basis. And so, really on average, when we look at these interchange fees, you can see down here at the bottom, the average cost for the interchange is 1.25% to 1.80% of the transaction amount. And, I really always say that interchange fees, they're somewhat of a double-edged sword, if you will. They're the same for 99.999% of businesses, that are out there. The bad news is that, they're non-negotiable. They are what they are. However, I will say that, really over the past, I would probably say 2 years or so, we have actually seen card processing providers starting to add markups or additional margin on top of these interchange fees, unbeknownst to their small business, to their merchant customers. And obviously they do that to drive revenue, and it's hidden revenue, and it's not transparent. It really goes back to a lot of the problems that we mentioned there at the beginning. So, but anyhow, Visa, MasterCard, Discover, they all have their interchange rates on their respective websites. There's, literally, probably 1,000 or so categories of these fees, which is, again, an example of why the pricing is so darn confusing. And so the next component, the second component, is what's referred to as network fees. And these are the fees that are actually paid out to the card brands. So Visa, MasterCard, Discover, American Express. And so, also if you have a debit card, you might see some of these logos on an ATM like Cirrus, Nice, Pulse, Star. These are debit networks, and they're also paid when those debit cards are used. So traditionally, network fees, they've been similar to the interchange fees, whereas they were the same for all businesses, but again, this is another area that we've seen, merchant processing providers adding markups on top of these network fees, unbeknownst to their customers. There are far fewer categories of network fees, and really the margin is much smaller, here too. So again, going back to your interchange fees, on average, those interchange fees are around 1.25% to 1.80% per transaction. Your network fees account for really only about 13 basis points, so 0.13% to around 16 basis points, per transaction. So, much less there than the interchange fees. And then lastly, the third component is what we refer to as the acquiring fees, or the actual processor fees, if you will. And so these are the fees that are paid out to your actual card processing, provider. And these fees are going to vary from business to business and are typically going to consist of a percentage of the sale, a per transaction fee, and then there's also monthly fees, sometimes semi-annual and annual fees. These fees are typically not provided to you as a business or practice in a transparent manner, and by terms created by the processing provider, they can actually be changed or increased at any time in most cases, which again, it's a major factor in small and private businesses. Literally, paying, you can see here, 10 to 100 times more than what, a national chain might pay. And again, obviously, when we're comparing, small businesses to national chains, there's obviously a volume discrepancy there, but really a large portion of businesses paying so much more than these national chains is they just don't have the knowledge to really understand what's a good deal, what's a great deal, what's a bad deal, but really more importantly, to be able to keep it in place. So with that being said, calculating your effective rate, and this is something that you can do, as a business, to really kind of monitor your statements ongoing. And so, I know I've provided you a lot of information, and it probably still seems pretty confusing. And you're not going to be able to go, look at your statement, figure out what you paid in interchange fees, what you paid in network fees, acquiring fees. But, with this tip, what you can do is you can somewhat stay on top of what you're paying. And so you do this by calculating your overall effective rate. And when you calculate this, you're calculating essentially for any given month what you paid for processing each and every single time you processed a card. And so to get your effective rate, you'll simply take the amount you were charged for processing, divide that into the amount that you processed. And so, for example, if you processed, say, $10,000, just throwing out a number, in January, and your fees were $300, well, you take 300, divide that into the 10,000, and on your calculator, that'll come out as 0.03, which would be, 3%. And so for that month, every time you processed a card, factoring in all of your fees, your interchange fees, your network fees, your acquiring fees, any monthly fees, 3% is what you paid off the top of each transaction. Now, this obviously won't tell you if you're completely overpaying, but if you do this month in and month out, you'll be able to monitor when your rate jumps. So, for example, if you typically see your overall effective rate coming in at 2.5%, and then one month it jumps to 3.5%, you're going to know to further investigate, why that happened. Now, it's not out of the ordinary for your overall effective rate to fluctuate by just a couple of basis points each month. That can happen, but maybe one month you take more debit cards than rewards cards, or you had more payments over the phone. But if you see the effective rate take a big jump, you're going to know that something probably isn't right. And so, what I'll say is that, most of our, physician clients are probably, having an effective rate in the range of, and again, some offices take more face-to-face payments. Some have, online payment options. But I would say the range for our customers, really specifically, through the AOA program, is probably an effective rate of around 1.7 to 2.1% or so. And again, it's going to vary on the, average ticket, how the payment's accepted, et cetera. So our next slide, questions to ask your processing, company. So, really, when we look at everything, maybe you're already considering switching providers, and maybe that's why you guys decided to join the webinar. excuse me. So here we'll talk a little bit about what you need to do if you are in fact considering, moving to a new provider, or if you might be getting ready to set up a new merchant account, for the first time. And so really you want to understand each and every fee you're going to incur under the agreement. So really, just asking what fees may be introduced down the road. And while there may be a lot there and you may not fully understand all of the fees, really forcing your representative to go through each one, it's going to show you, how thorough they really are. Have them point out each fee. Have them point out, the contract and discuss what each one means. Ask questions. As consumers, I mean, we can often, time sense if someone's trying to pull one over on us just by asking questions and seeing how they respond. Find out if there's a specific term to what you're signing, whether there's a contract, if it's month to month, or if it's 3 years. Really make the representative show you in that contract, what the penalty is, for example, if you cancel. If you need new equipment, it's typically best to stay away from leases. Many providers will push leases as a form of security. They'll sell to you that if everything happens to the equipment, it will be replaced to you at no cost. For one, you can end up paying for something 5 times over, but typically leases that are offered by credit card processors, they're non-cancelable, and they also require a personal guarantee. Also find out who's going to help you if you have issues. Typically, you'll always have an 800 number that you can call into for assistance if necessary. Ask the representative for that number and do a test call to see how long it takes you to get through before signing up. And then I know this is kind of a common sense thing, but, read the fine print on everything. Often the terms and conditions for these processing contracts, a lot of times they're not, I know this sounds crazy, but a lot of times they won't provide these terms and conditions until after, a contract is signed. And so in many cases, a representative might tell you one thing, but, what's in the fine print is going to overrule anything that your representative, will tell you. For example, we had a physician reach out to us, to have us review their contract and statements. And, after review, the contract stated that there was no early termination fee, that if they, if they canceled, they didn't have to pay a specific number. But once we reviewed the terms and conditions, it had that liquidated damages were referenced. And so, while this physician technically didn't have to pay an early termination fee per se, what they had to pay were what they deemed liquidated damages if they chose to cancel the contract, basically what equated to the lost revenue to that processor, whatever they estimated that for the remainder of the contract, which, turned out to be a big number. So, again, ask about termination fees, other fees, ask, about PCI. This might be a term that many of you see on your statements, PCI and non-PCI compliance fees. What does that mean? Are there monthly minimums, regulatory fees, application fees, reprogramming fees? So oftentimes these fees will be in a contract, but not transparently discussed by your representative. So, with that, I know I've kind of gone through, a lot here, but would love to open it up to questions at this point. And, if anybody has any specific questions regarding their statements or whatnot, happy to take those.
Thanks, Jeremy. If anyone has a question, please feel free to use the chat function or the Q&A tab on the webinar. One question I know that we have gotten in the office is does it matter what a minimum charge is in an office? Is there a difference, the fees that people should look out for if they generally have a low average cost, or people are with high deductible plans are paying larger amounts? Does that play into fees at all?
Yeah, it does, Joanne. I will say not typically, for a physician, office. It really gets costly, if you're taking $5 and $10 transactions and whatnot, that's when it can, really be harmful. But, as long as your tickets are up over, $20 and $25, you're not incurring too much of a burden there.
Great. So another question would be also, what would be the benefit to working with Merchants Pact rather than our members just calling their processing servers themselves?
Sure. So, with Merchants Pact, I mean, we have the knowledge and expertise. And so a lot of what I've gone through with you today, these interchange fees, the network fees, the acquiring fees, we have the technology to be able to go through each one, all of these different line items on your statement to see what you're being billed and if it's a correct charge or not. And so, really, when you call in to your provider, you don't know what's a good deal. You don't know. You can only go. They might be able to save you, let's say $500. But what if they can really save you about $2,500? You're really not going to know, because we know the levels that they're willing to go to on their pricing. And again, it's the knowledge and expertise, that we hold. We're pros in this area, if you will.
And if anybody wants to take advantage of the free consultation, what would they need to be put together to send into you?
So, a couple things that we can do. One, if they have their recent merchant processing statements, we can take a look at those and essentially tell them, had they been under the Merchants Pact consulting services, what their fees would have been for that given month. Or what they can also do, I know sometimes in many cases, a lot of these, and this is an issue within the industry, many of these providers out there, they sometimes don't provide these statements via paper or mail. And so oftentimes what they might do is force you to set up online access, which, a lot of us, we may get busy, we may not do. And then it's like, well, where do I go to get my statement? If for some reason you don't have a statement, really all we would need is the average, your volume month over month for a couple months, and then the number of transactions that you actually process, and then we can estimate, what your cost would be.
A question came in, and I think you covered this a little bit in the beginning. Does pricing change often, like with phone companies?
So with it's going to vary from provider to provider. And so what I'll tell you is, so we discussed the three different components of fees: the interchange fees, the network fees, and the acquiring fees. So the interchange fees and the network fees, those are, again, are what is considered cost with credit card processing. And those fees are actually, I say, tinkered with every April and October. Visa and MasterCard and the issuing banks will look at those fees. When they make changes, a lot of times, I mean, we're talking 1/100, sometimes even 1/1000th of percentage points. Okay, so really not anything that would make a major difference to your average business. However, with your processing providers, I mean, that stuff can change. They can change their pricing monthly. They do it typically. They do it slowly. And the reason that they do that, when they do it slowly, you're less likely to notice over time. If they hit you with a big increase all at once, you're typically going to notice right away. So typically they do it often and slowly.
Another question has come in. Are you allowed to charge an extra 3% to a patient's bill to cover some of your losses, just like a retail store does? Sometimes they'll say, if you use your credit card, we'll add an extra 3%.
Sure. So it's a little bit tricky. Now, I will say, with that, there are ways that you can do that. And typically it's in the form of you're charging a convenience fee, if you will. Many businesses do it. You can ride down, an interstate and see a big gas station flashing two different prices, one for cash and one for credit. But, when you're going by Visa, MasterCard regulations, you would refer to that as a convenience fee, and it would be basically them paying your bill over the internet. Maybe you have a pay your bill button on your website, or over the phone. They can call in and then they can pay you over the phone, and you could do that and deem that a convenience fee.
Thank you. Well, I think that covers most of the questions that we received. Again, Jeremy has his phone number and email up here. If you'd like to contact him directly, you can also contact membervalue@osteopathic.org to reach the AOA member value team. Just want to repeat that we did record this and we will be sharing the presentation. We'll send you a follow-up information email in about a week so that you can access some of this information again and also have Jeremy's information again. Thank you. Thank you everyone for joining, and thank you again to Jeremy for presenting this great information. Have a good night.
Thanks, everyone. Have a great evening. Thanks.